Hi folks, welcome to my webinar. My name is Aparajit Gupta and I work with Rakuten for their banking team. Before I jump into today's discussion how banks are transforming from traditional lenders to technology hubs, let me give you a perspective as to why I chose this topic. In my experience as a CX sales professional for over 17 years now, mainly in banking and financial services, I have noticed and seen how banks have evolved over the years to make it more inclusive, simpler, and customer oriented using technology. As recent as 2008, a simple opening of a savings account with a debit card was a very lengthy process with customers, required to visit the branch for verification, and even for the bank, it involved a lot of paperwork and operations. Over the years, this process became simpler because technology was getting used. And today, we can open an account from the comfort of our home or office using a digital channel and a video KYC for verification. For banks, it is very helpful because it saves their manpower costs, costs of acquisitions, processing, and they can even go ahead and acquire customers from the remotest town in India, leading to financial inclusion. And of course, they are delivering high quality service and experience to customers. Similarly, if we were to take the example of customer service, a very common problem that comes to my mind is helpline numbers. As a customer, I do not for any moment like waiting on an IVR. And I'm very desperate to kind of press the 9 button on my keypad to talk to an agent and get serviced. So each time I talk to an agent, I need to explain my service issues again and again. And this can often be very frustrating. Thankfully, a lot of financial service companies, they are now adopting call center automation. Just like we say management by exception, call center automation ensures human agent intervention only for difficult to handle customer queries. We are going to talk about this and many more. In fact, we have all heard from a tech standpoint. What I'm trying to do and what I will do in this webinar essentially is balance between technology and the business so that we get a business perspective and how customers or banks are getting helped with this technology. So let's try and decode the banks of tomorrow. I talked about some examples. While these are nice and simple to listen to, they involve a lot of work actually. So, any digital transformation, when I say it's not basically an on off switch, it requires a lot of effort and a vision of the management at the top. And today, if you see, banks have competition from fintechs and digital banks, neobanks, who are all kind of eating into the revenue. Of course, COVID to an extent has accelerated the digitization process, but you need the technology, digital, business teams work together to deliver such a transformation. It all starts with these main pillars, which you will notice that there is a shift in operating model for banks and financial services. Digital banking is delivering hyper personalization, use of artificial intelligence for both back-end operations as well as custom-facing applications, and conversational banking being used in services. This whole story being stitched together by cloud adoption and architecture modernization. Let us try and go a little deeper into each of these. I've already stated that the operating models have shifted. What has happened is it has given rise to newer business models and point of context buying. And the whole of it is running on APIs and in API driven ecosystem. So today as a customer, when I'm checking out of a page for an Amazon or Flipkart or Swiggy, Zomato, whatnot, I'm being offered a credit card. Or maybe I'm shopping on a platform for cosmetics and during checkout, I'm given an EMI option. Of course, as a customer, I may not even know the NBFC which is financing it because it's embedded finance, but I get that option to buy the products. So these are the newer business models which have now come up. Now, how is it that bank is getting all this information? So historically, banks had a lot of data. The problem has been banks were not being able to make sense of that data or use that data. Today, with artificial intelligence and these data models, banks are churning around huge quantum of data, and they are finding out these insights and pivoting their product decisions and customer preferences based on this data. So if I were to do a lot of online shopping, banks get to know that I am a customer for co-branded cards. Or maybe my wife paid our son's school fees online, and immediately there is an option of, say, a child's education loan for me. This is how modern banking and modern financial services are working today. At the start of my webinar, I talked about how customers used to visit a branch to open a savings account, and it took 7 days to getting an account opened. Or maybe, we would have all seen our parents queue up in a branch to get their passbooks updated. So these were the single channels, the brick and mortar branches, and these still exist today. At one point, I think there was a competition amongst banks to open up branches in every nook and corner of the city. As time moved on, banks kept adding channels. So they added DSAs, they added huge sales outbound teams. Then came the era where there was a lot of internet banking, and then there was mobile banking, there was instant kits. So they became multi-channels. As we move today, what is happening essentially is that banks do not want a customer to visit their branch, and rightly so, because for simple tasks, if the customer visits a branch, it adds on to the operating expenses and costs for that branch. In fact, I was talking to a very senior leader of a bank a couple of months back, and he had a very interesting perspective. He said, banks have transitioned to a level where you do not even want to force customers to come to banking channels. Rather, the aim and objective should be the bank has to follow the customers to their preferred channels. So essentially, I'm a customer and I'm browsing on my cell phone on Instagram, and I see a credit card advertisement and I hop into the journey. Maybe I would have done some comparisons of rates and features online, and I select that variant. I continue with the digital application for a step or so, and maybe I switch from my cell phone to my iPad. The omni-channel experience ensures that I do not need to restart my journey. Rather, I started from where I had left it a few moments back. And to take it a step ahead, maybe something urgent came up, I dropped off that journey, I abandoned it, I have not completed it, and I forget it for a few days. A few days later, maybe I hop into one of the branches for a service request. And the customer service agent, the branch agent, he services me, and then he says, "Hey, Mr. Gupta, you have an unfinished application of your credit card. Would you like to complete it?" What has happened is that the branch CRM has integrated with the digital journeys, and my application starts exactly from where I had kind of dropped off a few days back. And this is a customer delight for me. This is actually a wow moment. So it is no wonder that today's data shows that digital channel performance for both sourcing as well as servicing for these online channels are surpassing the traditional channels, and banks are saving huge money by switching customers from traditional channels to the digital channels. Now let's imagine the same thing for customer service. There is a report from a large consulting firm that 50% of the users, they want to switch between human and digital channels for banking. As a customer, I'm very comfortable with using a mobile app of my bank and doing everything on that. Having said that, there could be specific queries for which I need to reach out to the bank. Of course, I can drive down to a branch and get myself serviced over there. But it is also not possible always. It is sometimes very difficult. You have to drive down, park your car, step out, walk into a branch, and then get your queries addressed. So I want to reach out to these folks, but at the comfort of my digital channels. Again, what is also happening is bank is getting new customers, and there are a lot of Gen Zs who have now started banking. They are very tech savvy and they are very comfortable with the way they use their devices. Now, to service them effectively, what banks are now resorting to is called conversational banking. Conversational banking, if if I can say, it is basically a midpoint between a neobank, which is completely self-service, and on the other side there is this traditional branch where you have at every step you have someone to guide you through. So this is an ideal combination of the two, where you have all the ways to execute tasks on your own. However, you can also reach out to the banks as and when you get stuck. Conversational banking uses artificial intelligence to provide customer service. So it could be via web, it could be app based, OTT, chatbots, WhatsApp, natural voice based intelligent virtual assistants like Siri, Alexa. And these systems are designed in a way that it responds quickly and accurately to customer queries, allowing banks or any other BFSI to provide personalized service without hiring any additional human agents. As a customer, I'm very happy because firstly, I have access 24/7. I have a first contact resolution. I have personalized interactions and a multi-channel experience. So since I'm happy, the likelihood of customers or me sticking on to my bank is much higher. So the retention power goes much, much high with this conversational banking. We talked about conversational banking. Let me give you a perspective because I've worked in companies who have provided cutting edge AI solutions to banks. I'll give you a perspective about how AI has helped in digitization. Uh, Allow me to pick up any simple use case. I mean, let's pick up this simple inbound use case for a bank's call center. Instead of a mechanical IVR greeting, as a customer, if I call up a helpline, I'm greeted by a near human like voice bot today. And it is happening in my preferred language. It could be Hindi, English, Hinglish, or even vernaculars. Now, conversational AI and NLP that allows me to converse about my service issues, and the bot is able to recognize the intent of my call. It will attempt to solve my issues if this is a kind of a simple query. And as a customer, I'm very delighted that I didn't need to wait in an IVR for a resolution. If my query is complex, what the bot will do, it will transfer my call directly to a specialized human agent rather than making me go round and round through all the nodes of the IVR phone tree. Again, it is a big time saver for me. Imagine how happy I will be as a customer with this specialized customer service human agent when that agent greets me in my native language and by my name and they solve my issue. I may even be open to having new product information, and this will lead to a service to sales kind of a situation. What essentially happens is that this human agent at the call center, he has access to a CRM system which is integrated with his telephony, which gives him a customer 360 view. Now, this view contains all information about my demography, spend patterns, my banking relationships, my family banking relationships, past service requests, resolution remarks, social media interactions for services, and whatnot. All of this empowers this human agent to drive a very contextual and purpose driven conversation using AI based tools. And this helps him get these next best actions by predicting my banking needs proactively and tracking my financial journey. Using all this technology, what has happened is bank has effectively scaled up and managed call volumes and fluctuations using AI without adding any manpower, by ensuring these voice bots actually handle the bulk of the inbound calls. And in this inbound calls, 80% of the inbound calls are these simple calls. And that is something which is a huge traffic. So if bots are able to manage these simple queries, it resolves a lot of cost issues for these banks and call centers. And again, we all know there's a lot of attrition in call centers. It solves for that. It standardizes the brand messaging, so on and so forth. The agents which are now working, the human agents which are now working, they do not need to focus on these simple queries and simple tasks. They focus on the complex ones. And this enhances their productivity and job satisfaction. Additionally, AI is also getting used for automation. Couple of examples could be loan underwriting. That uses RPAs and ML models to improve speed and efficiency and reduce risk. In fact, nowadays these modern algorithms work on multiple data sources. This improves assessment and of this customer profile and reduces delinquency for the bank. Even for collections, you have early warning systems. So these AI models run on customer data sets and can predict customer repayment patterns. Also, in fact, I have seen voice bots, they are getting used for soft bucket collections. So for all these, simple collections, payment due dates, promise to pay, payment reminders, we are using technology, just not just for banking. In fact, this is happening in all sectors. So there is a huge cost saving using AI and all modern technology for banks. While we have talked about all these applications and digital initiatives, I just wanted to give you some idea about how architecture and cloud modernization have also changed. We all know cloud is the engine for transformation and a significant portion of the cost for any bank. Now, the evolution of legacy and its associated data is fundamental for any outcome based transformation. Given that costs and timeline, these are the two major deciding factors for any cloud forward strategy. Historically, of course, we had monoliths as the core banking system of choice. While monolith is convenient for initial software deployment, testing, the biggest drawback is they're not built to scale. They are not built for configuration, and systems become clunky. It's not easy to adapt. Essentially, any update would actually mean redeployment of the whole system each time. The costs are impacted, there is long lead times, and of course, lack of integration capabilities. So systems have moved from monoliths to modular, which uses a brick by brick kind of an approach by allowing banks to focus and increase their capacity in specific areas without dependency. The problem over here is, imagine modularity is like a puzzle where pieces have fit together in a specific way. The issue is you cannot just swap out any of these modules for better ones, because they were designed with a specific purpose in mind, and it is very difficult to kind of retrofit better functionality. What we are seeing is the future of architecture being composable banking, which is a decoupled cloud native microservices platform. With this, a bank can quickly build, launch, even iterate on new products and customer experiences. It can mix and match different services from an ecosystem of specialist vendors, because no one vendor can be perfect or can be the apt one for all your services. Rather than depending on one, banks are using a mix of different vendors to create highly customized user experiences and journeys. These services are then linked together by event streams that shape the user journey and work to make these applications more resilient, more agile, and real time. So, traditional monoliths to modular to composable banking. What has happened is banking is now realizing the true value of banking as a service. This has allowed banks to kind of modernize extremely in terms of services which they are offering, in terms of the products they have offered, and how quickly they are getting these products out in the market. So, in conclusion, uh, I hope I've been able to give you a high level view. Let's appreciate that banking landscape is very complex and heterogeneous with all applications, microservices, multi cloud environments, data, and whatnot. And the point is, user experience is directly impacting banks' business. So, banks need to kind of give and ensure a seamless experience to all its internal and external users or customers. And frankly, it's not simple to maintain these systems and IT to have a near zero latency and minimum outage. Interestingly, and this is probably the most interesting part of this webinar today, what we do at Rakuten SixthSense is that our solutions monitor some of these applications, infrastructure, mobile, Kubernetes, end user experience, and data for banks and large corporations. So I'll leave you with this thought that what if we can proactively manage all these integrated systems intelligently using AI models instead of a reactive kind of a monitoring and resolution. Once they fail, we kind of monitor and resolve. Instead of all that, what it could do if we could do it all proactively. Stay tuned for the next webinar, and thank you for this one.